I'm going to go over one of the best counter trend trading systems I've found. I like to call it the Divergence counter trend Forex trading system. Rules. Preferably trade this in the direction of the weekly or monthly trend. Preferably enter trades at or beyond our containment bands, which means if you want to buy, you want the weekly or monthly trend to be up. Today was a counter trend day down, and the price is at or below the lower containment bands, the 2.0 white band. If the weekly and monthly trend are down, and today is a counter trend day up, you want to sell at the upper containment band. Wait for a double top or bottom, or slightly beyond. If you're looking to sell the highs, the price can go slightly above the previous high. If you're looking to buy the bottom, the price can go slightly below the previous low. If the second high or low has 1/2 the momentum in our FX trend intensity, take the counter trend trade. Enter on a sideways breakout or trendline break. And stops are to be placed 2 to 3 pips beyond the swing high or low. Let's look at some examples. Here we have the dollar CAD. As you can see, the day started off, the daily, weekly, monthly trend was down. The price came up, hit our upper containment band. It also hit a pivot level. There's a weekly pivot level up here, and we have a counter trend stat tool signal for sells. However, let's zoom in. Notice we have a double top here. The first wave up, it had moderate strength, less than the extreme level, and then when it double topped, pretty much at the exact same level, it has 1/2 the momentum previously. Anytime you see a double top, especially if it's 30 minutes to an hour or more apart from the previous swing, and the momentum is half of that, usually the trend reverses, especially if the weekly and monthly trend, which you can see on the bottom, is down. And this price fell about 80 pips in about an hour. Now, this method can be used in trading against the longer time frame trend as well, but you're less likely to find as big a moves. For example, this currency is very strong. The daily, weekly, monthly trend's up. The price was above the hourly and it tried to shoot up. Previous day's high resistance level here, which oftentimes has selling as price comes up to it from underneath. And notice that as this pretty much double topped right here, it had pretty decent strength the first time and virtually nothing the second time. And of course, price reversed and then after a while exploded down. Notice the second time up to the high, the momentum, and it pulled back and it double topped half an hour later with less strength than it had before. Again, another example of divergence. This makes also an excellent place to exit trend trades. If you were in this trade here or here and you saw a double top with half the momentum of the previous swing, usually price reverses and you'd exit your trend trade up here. Aggressive traders would also look to do a counter trend trade. If you do a counter trend trade and the daily, weekly, and monthly trend's up and very strong like this, usually price stalls at the hourly. So if it stalls at the hourly, you want to get out with a smaller 20-25 pip profit. Here we have another strong currency. The daily trend most of the day was up until briefly here. The weekly and monthly trend is one of the strongest. Comes down to our lower containment bands, rallies up, comes back down, and you can see the weakness is about half of what the previous swing is, and it starts to go back up and you get in. And you can use tick charts to find a more precise entry level than 5-minute charts, or 2-minute charts work as well. Here's another example. We have the New Zealand yen, which also is very strong. The daily, weekly, monthly trend's up. It comes down, doesn't really even go up that much, and then makes a lower low. This is an example of if you see a lower low being made or a double bottom with half the weakness of before, those kind of trends oftentimes reverse, and you can see this did. Here's another example, pound yen. The weekly trend is very strong. Of all the time frame trends, daily, weekly, and monthly, I primarily focus on the weekly. So if the daily trend's down, the monthly trend's down, but the weekly trend's up, that's good enough to look for buys at the bottom. Here it came down. It wasn't extremely weak the first time. It made a slightly lower low. Our stat told counter trend buy signal showed up. The weakness was maybe 40% less than the previous time, and you got into that trade here. And then it also came down and double bottomed again. This weakness also was less than this. Because the weekly and monthly trend are both up, you would have got back in the trade, and the second one caused a big move in the direction of the longer term trends. And basically the reason that this works is the biggest traders in the world who manage billions of dollars, if a currency's trends up, they try to buy the bottoms. If today is a pullback day and the market falls 50 to 150, 200 pips, and the longer term trends up, then they're buying at the bottom. Here's some more examples on another day. This currency, you can clearly see the monthly trend's very strong. The weekly trend was very strong. Briefly went slightly negative right here, but you can see there was some real-time extreme weakness here and here. The market went up, came back down. This is our trading zone fib level that I manually draw on multi-day and multi-week trends. And so it was a very, very strong level of support. And sometimes you get a low, it comes back up, and it can't even get back down to the previous low. If the weekly and monthly trend are very strong, as in this case, and the second pullback has almost no weakness whatsoever, this makes a great place to get in, because remember, the weekly and monthly trend are very strong, and a lot of times these reverse off the lows and go at the minimum up to the hourly moving average, which is about 30 to 40 pips away. Here's the Australian dollar. Also note the weekly and monthly trend are very strong, so looking for double bottoms at the lows. Once the earlier extreme weakness is gone at the second double bottom, notice it's about half as weak as it was before, and as it goes sideways right here, the weakness all but disappears, and then the market explodes up close to 90 pips. Notice as it makes a high here, pulls back, there's almost no weakness on the pullback, then it comes back up again. You have the exact opposite, double top right near our upper containment bands. It's a previous day's high and it's a weekly pivot level, and the statistical upwards momentum and strength is almost non-existent. And then the market falls from 101.70 all the way down to parity. It's a 170 pip drop. Notice the dollar CAD. In this particular instance, the daily, weekly, and monthly trend is down. So looking to buy the bottoms here usually is not a very wise idea. One of the reasons I'm showing this example is because despite the extreme weakness over the daily, weekly, and monthly time frame trend, when you see the currency come down with very little weakness and double bottom or triple bottom near the lows with almost no weakness right near our lower containment band and our trading zone projected low of the day, it's still oftentimes a good counter trend method, and you would trade it back up to the hourly, and if it shoots through the hourly, then it can go all the way to our upper containment bands. We're spotting in real time right now a double top that had extreme strength, and then now the strength is almost non-existent. So if you are watching this live right now, you'd be looking for the price to break underneath the low right here and go underneath 100.74 to go short with your stop right above the high of the swing. Here we have a currency that has a very weak weekly and monthly trend, and it comes up, doesn't even have that much strength, and then double tops a few hours later also with very little strength and less strength than before. And as this thing's going sideways right here, you can see the strength falls off a cliff. There's almost no strength whatsoever. If you see a double top, you can use this as another form of divergence trade. If a currency, especially if it's very weak over the last week and month and the trend has been down, if you see a double top with no upwards momentum, less than our 20 dotted white line here, if it's half that or approximately, and then you see a double top with even less than that, because the longer time frame trend is down, it's a great place to look to go short up here. And you can also use tick charts to find more precise entries. Here you see two of these divergence patterns. First of all, the daily trend is very weak, the weekly trend is down, however the monthly trend is slightly up. You have a double bottom right here last night, extreme weakness followed by the double bottom having 1/2 or less the weakness of before, and you look to go long right here, and of course the price goes up a little bit and stalls out. Anytime you take a trade against the weekly trend, that's the primary longer time frame trend that I use, you're not always going to get big moves. And of course the price comes down again, but it has extreme weakness right there. You wouldn't be looking to buy that. That doesn't fit the example of a double top, double bottom with divergence. This is a riskier trade because the market was extremely weak. Now up at the highs, the market explodes up, and it explodes up again. You can see our counter trend triangle, which oftentimes is the end of the move. It's the highest high or lowest low of the day, and the price comes down and comes back up. You can see the extreme strength that was there before is now gone right here, and you'd be looking to sell it. It doesn't always have to go exactly up to the high. It can be 10 to 25 pips underneath the high, or even as much as 10 to 25 pips above the high. If you see it make a higher high and it had extreme strength, and it makes a higher high with almost no strength whatsoever like this, it's often a sign of a reversal. Same thing with a pullback like this. You had a pretty severe pullback, very weak pullback, and it went back up with half the strength it previously had. So this is also a head and shoulders pattern, which you don't see that often in Forex markets. But because the weekly trend was down, you go short, and this one happened to fall explosively down.